In this video, I will talk about the difference between being deterministic and being probabilistic, with the purpose of helping you to become more aware and then ask yourself, am I really trading probabilities or am I thinking about possibilities due to a deterministic idea? Determinism just means every event has a cause, which in physics is known as cause and effect. Determinism has the idea that reality follows a sort of predetermined path. Determinism is related to the idea of causality, the relationship between cause and effect. Under certain conditions, an event will cause an outcome. Let's take a human example. Let's say you're driving down the road and a person in a car coming towards you is texting. The driver doesn't see you and you swerve to miss the car, but hit the neighbor's mailbox. The cause of the accident was not that you swerved, but that another driver was on a cell phone while driving. The effect was hitting the mailbox by avoiding hitting the other driver. Let's say you have a bucket of water and you put it outside on a below freezing day. What will happen? The water will freeze. Under these conditions, this is the only possible outcome. These examples are quite different one from the other because of the quantity of different variables. But determinist people believe that the exact same outcome will have happened no matter who was driving the car, the same as who was putting the bucket of water outside. The deterministic belief is that the outcomes of both of these very different scenarios are predetermined. Probabilism means that we either don't have or can't have all of the information to assess the specifics of an event. So we have to assess probability. For example, if we roll a dice, we don't have all of the specifics of the way the die was flung, the weight of the die, the surface of the die, and the surface of what the die lands on, the specific gravitational force, the air pressure, and so on, to figure out what it will causally land on. Our lack of knowledge means we can only assess a probability of a 1 in 6 chance for each number. In other words, probabilism doesn't necessarily imply that each of the options 1 through 6 are actually possible, only that our lack of knowledge of the only possibility means we need to assign a probability, that is, a range of likely outcomes. Probabilistic sciences are those such as psychology and economics that deal mainly with phenomena that are not perfectly predictable and with causes that are generally neither necessary nor sufficient. For example, attractive people are generally responded to more favorably than the unattractive, but not all beautiful people are well liked, and good looks are not a requirement for winning another person's esteem or affection. Deterministic sciences, on the other hand, are those such as chemistry and many branches of physics that typically deal with much tighter phenomena for which the causal connections are more often necessary and sufficient. For example, to increase the gravitational attraction of two objects of a given mass, it is both necessary and sufficient to move them closer together. Then the misunderstanding of determinism and probabilism is one of the main causes that people treat unconsciously trading as if this activity was a deterministic science, where you have determined causes and effects. And this is why when you begin the trading journey without being aware of it, you are approaching trading like 99% of people, trying to learn everything already established as if you are studying to be a chemist, an engineer, or a lawyer, whose sciences are deterministic, learning a bunch of information and rules that you assume are necessary for success, when in reality, trading will be more of a probabilistic science sort of saying, because in reality, you never have all the specifics to really know what is going on behind the charts. Why price is rising instead of falling, and vice versa. In reality, nobody has a concise and real reason of why. In other words, the true cause and effect. As human beings, we are prone to faulty reasoning and erroneous beliefs, and they cannot be eliminated. People will always be tempted to the idea that everything happens for a reason, and what happens to us is controllable, and also tempted to oversimplify beliefs and hold them with excessive confidence. Therefore, we get generalization. And this is one of the problems I wanted to get at. The trend is your friend until it ends. Money can only be done in trends. Do you really know when this trend is going to change? Do you really know when the trend ends? And when it supposedly ends, it always ends? Plan the trade, trade the plan. One thing is having very simple and specific rules to trade successfully, but other very different, planning your trade, assuming you think you know how price will move, at what speed, and with what forms. Can you really plan that? Support becomes resistance, resistance becomes support. The same support will become the resistance? Will it always be the most recent one? If it becomes resistance, will it indicate it with the same forms, patterns? Sometimes it only reacts, and sometimes price just goes through that line as if it didn't exist. Therefore, is there a way to really know when one or the other will happen consistently? Generalization becomes a problem in an activity that is uncontrollable and uncertain, and where you, as a retail trader, do not have real information. And therefore, you do not know what happened, do not know what is happening, and therefore you do not know what will happen. Generalization is a quick tactic people use when talking about ideas and reasons they believe is causing or will cause something. If you want to start pulling ahead and have a better chance at succeeding in trading, you need to be aware and stop this generalization. You will find this everywhere. People generalize all the time about the markets. Awareness and training are key to avoid falling into this trap, because 95% or more in trading is mental, which means 95% plus of the problem is inside your head, not outside. The problem is not the markets, the forms, the randomness. The problem starts with how you perceive things. And it's the same for the others. Nobody is exempt. It doesn't matter if that person is called an expert. Therefore, it's imperative that you understand how to trade in the most objective, clear, simple, and a specific way possible. One of the most liberating understanding is that in fact, you do not need to know everything that is out there to make money, but concentrating on one single thing and specify rules to that specific one thing. There are hundreds and even thousands of trading indicators, hundreds of different chart patterns, hundreds of candle formations, dozens of theories, and millions of possible combinations. Do you begin to see the problem of generalization? Do you realize why trading can be treated as a science and education about how the markets supposedly work? Do you realize that it is not really education but beliefs and generalizations? When you develop the skill to trade the present and only pay attention to the right side of the chart, you naturally stop generalizing and therefore will be free of beliefs and ideologies. Because since the right side of the chart is formless and is the same in any time frame or chart type and is in the here and the now, the only thing left is following and not assuming, predicting, deducing, anticipating, and all those actions that are based on cognitive biases and subjectivity that makes you more prone to trade emotionally. When you come to trading and automatically start studying theories like Elliott waves, Fibonacci sequences, or price action, or any other idea that became popular, are you aware that what you are receiving is a second-hand information, maybe even third, fourth, or eighth-hand information or more? Why is this critical? Because you are getting information with no basis in science, full of beliefs, ideologies, cognitive biases, agendas, and generalizations, instead of paying attention to the right side of the chart, which is price, which is never second, third, or sixth-hand information, but it is the same information for everybody, no matter what is in our heads.
As I said, one of the most important understandings in trading is that in order to be profitable, you need to be more specific. And when you become more specific, you are able to concentrate in one thing and then exploit that one thing. Focus, commitment, discipline, perseverance, all these are important. But if you are not specific enough, how can you really get results and achieve goals? Here I have a GBP USD 60 minutes. I don't use indicators, but I'm using these indicators so it's easier for you to see quick what I'm going to be talking about. As you can see, you have a lot of fractals or highs and lows, and as I said, one of the most important things is stop generalizing. Support becomes resistance, resistance becomes support, higher highs, higher lows, lower highs. That's too general. How can you really be more specific? So let's see some examples. Here I am 2017 and I'm selecting this London opening. How can you be more specific? This is how you start. Every day, 3 a.m. in the morning. You're being specific. When? 3 a.m. in the morning. After that time, what are you going to be waiting for? The first fractal that appears. So here you have it. This is the first fractal. Not this, not that, not support becomes resistance, lower lows, lower highs. You're specific. You're not generalizing. This is a fractal, yes. This is a low, 2 to the left, 2 candles to the left, 2 candles to the right. But it's more specific because it's not just any fractal, but this is the one after 3 a.m. in the morning. So the first one that shows up. And then you have to remember when it shows up 2 hours later. You have 3 in the morning, 4 in the morning, 5 in the morning. Once you have this fractal here, we're going to see that it's not that this is going to show up every single time at 3 in the morning. Once you have that, you can put these two levels. They're not support or resistance, they're just levels, so you are able to see them and understand that after this, the right side of the chart is going to do two things: go above or go below. That's it. That's when you turn your mind into a probabilistic approach. You're seeing the market with probabilism. You don't know who's buying, how much they're buying with. You don't know all those factors that unfortunately and realistically cannot be known because we don't have information. So you cannot be deterministic. You're not looking at this candle because it's a decision candle, or because this came up again and then you have a railroad track or any other symbol. Once you have this, price starts moving. Remember the right side of the chart, which doesn't matter if I see candlestick formations or I see bar charts. The right side, this one, at that moment was here, but two things can happen now. Price is going to go above or is going to go below. We're going back to candlestick formations because this is going to look more familiar to you. Do I buy when it breaks? Should you buy when it breaks? Do I have to wait a specific candle? Those are the questions that are very troublesome for a lot of people. What do I do? What's the correct thing to do? Again, there's not correct way. It's a specific way for you. The price goes low, so it gives you this symbol, which in the mind of a lot of people is a symbol, but in reality, in this moment, you have a cheaper price to buy and put the stop to the opposite side of that specific area that you put there because of a specific moment. You're risking an average of 25 pips. So is that the average you're going to risk? 30 pips, no more than 30 pips? What you are going to do, be specific, write those rules. The price goes to the opposite direction, goes below this level, it actually goes quick, 46 pips. If you sold right there, it was a 46 pips, like a 1-to-1. But then the price goes up again, goes inside this area, which again gives you a price, but this time a higher price to sell high. You have your area, your specific area, and then the price, which gives you up, it depends where you enter, but let's say you enter around this price. You have a 25 pip risk. The price goes below for several hours, but this is the interesting thing. See how in order to make money, you don't need the price to go to the next level, go to the next low or high, but since you're selling high and lowering your risk, the price goes down, and it gives you a 1 or 2. So again, how you're specific. When am I going to trade? How much I'm going to risk? When I'm going to enter? Remember, you have sell limit orders and buy limit orders. In that way, you can specify at what price you want to sell or buy. But you already have a specific area that you're working with. The next day, you have here 3 in the morning. Here, the first fractal appears. Not this, not that, not lower lows, lower highs. The trend is refrained until it ends. All those truisms. But you're specific. Once you have that fractal, you have the 2 to the left, 2 to the right. You have this area. See how I'm selecting this area? You have the opening and the closing price. Now, can you do the highest point and the lowest point? Yes, but be specific. Right now, we're doing it with the close and the opening. 2 hours, you have the fractal, and then once you have that, what happens with price? So it seems that it went down, but in this time, you had 8 pips of risk. The price goes here, goes to the opposite. You still have the same 8 pips of risk, but then the price what does? Kept going for several hours to one direction. 8 pips and it went 68. Can you calculate how much radio that is? 8 pips, let's say 10 pips, goes 1, 2, 3, 4, 5, 6, 7 hours, 67 pips. Like about a 1 of 5 at least radio. Next day, 3 in the morning. And the first fractal that appears right there. You have your area that you specify. The price breaks that area, comes below here, same. You're looking to buy low, gives you less than 30 pips, and the price, well, almost, but didn't do it, goes to the opposite direction, almost goes to the opposite side, but then it kept going to that direction for several hours. The whole range was 41 pips. But that doesn't mean that you have to buy or sell with 41 pips of risk. That's why you have to understand to buy low or sell high. Next day, there you have 3 in the morning. The first fractal appears right there. And the fractal actually appears at 5 a.m. Eastern and is confirmed 7 a.m. You have your range. The price goes low. See how the price goes inside that area, which gives you an opportunity to sell high with around 10 pips, let's say 10 or 15 pips of risk, and then goes below 1 hour, 2 hours, 3 hours, 4 hours, 6 hours, and gives you another good risk reward ratio. Next day, they have 3 in the morning, the first fractal that shows up right there, and then you have your area. Price goes below, goes above, but your risk is about 14 pips. Here is the how many times you're going to trade this. Here is when it's confirmed. 2 to the left, 2 to the right. Goes below, goes above, and stay there for several hours, but didn't move much. How many times you're going to trade it? So as you can see, we're talking about when, what, how many times, how much. Those questions have to be answered specifically in order for you to start going somewhere. The next day, they have 3 in the morning. The first fractal that shows up, what happens with price? There you go. Goes above, comes inside that range, which again gives you an opportunity to buy low, 20 pips, and the price stay there for several hours. So you buy low, you minimize your risk, and when the price goes to one direction, your risk reward ratios are going to be really good. 3 a.m. in the morning, the price moves. Here's the first fractal that appears after 3 a.m. in the morning. The price goes down, as you can see, went down for 3 hours after it formed, at risk of 11 pips, broke, went down 84 pips. This was the day when Trump spoke and a lot of fundamental announcements happened. Again, when important fundamental announcements are going to be released, what do? Do I trade it or I don't trade that day? Do I wait after the release or do I trade before the release? What you are going to do, be specific. Next day, 3 in the morning, the fractal is confirmed. You have your range right there. Price breaks above, stays there, breaks below, goes above again, goes below, and then keeps on one direction. This is why it's important that you know how many times you're going to trade. The next day, 3 in the morning, and there you have the first fractal that actually is confirmed until 8 a.m. Eastern time. What happens with the price? See how the price goes here inside, so you can minimize risk, sell high, the price goes above and then comes back again. But then what happens? Goes to that direction. 1, 2, 3 times. Do you trade 3 times? Well, here you have a release in movement. Do you trade only 2 times? Well, that wasn't a good day. You trade only 1 time. But what you do, be specific, be disciplined to those rules. Try to see what happens. Observe. 3 in the morning. Again, next day, first fractal, the price goes up and it stays up for several hours, but again, the risk and the area is not that big, 26 pips. The next day comes. For how many hours you're going to keep this? You have to be specific. 3 in the morning, price goes up, goes up, goes up, goes up, goes up, and here you have the first fractal until, and it's confirmed until 11 a.m. in the morning. See, you're not generalizing, you're not just looking for things that look alike, but you're actually trading specific moments that, again, they're random because every moment is unique. Every trade is unique, but that specification is what makes it tradable, repeatable, and also can be exploited. See, as you can see, this is about not when you win, but when you lose, when the market doesn't move. That's important. Trading is not about winning. Trading is about keeping your investment, keeping your money, cutting your losses. This is 3 in the morning, London opening. The low or fractal is right there. It's appearing at 6 a.m. Eastern time. You have your candle, your lowest point, 2 candles to the left, 2 candles to the right. That's how it's popularly known. And there you have your area. You put these parallel lines, so you have a risk of, if you buy right now, of 14 pips. So obviously, as I said, you have to have specific places, specific limits that you have to write down, and you have to follow and apply. There are rules that you have to follow. But again, you have to be specific. As you can see, you're specific right here. So right now I'm in this buy with pretty much 13 pips of risk. So 2 things are going to happen. Price is going to continue going up, or it's going to go to the other side. So what you do when that happens, when, how many times you're going to trade, how much, all those are specific rules that can be applied, that can be written down, and can be followed. And you can see here now the price is going up. What you did is just buy price, the right side of the chart, but with the specifics. Do you start seeing the difference? This is a trade. Where are you going to go out and why? How long you're going to stay in that trade? So all those are other specifics that are important. Once you have all that together, it's very simple. Once you find those specific rules, so that specification, you're able to observe it and see that it's always there, then there's not much you can do. The only thing left is self-control. And then is when you realize why trading is 95% mental and doesn't have to do with knowing a lot of things, information, myths and theories and beliefs of the market.
the discipline and the ability to be specific not only serves in trading but in many areas of life. Do you remember a relationship problem that you had because you were not specific enough? Misunderstandings because you were not specific? Or have you gone in circles because you never defined and specified what you needed to do in order to achieve something first and then the next, wasting too much time? Had you ever taken longer because of not writing your goals? I hope this video is useful for you, and if you like it, please share it and subscribe to this channel. And the next time you see a chart and you are trading, remember, are you trading the right side of the chart, or are you trading the idea and belief of what happens on the left side of the chart? This is Luis Morelos, and remember, trade with logos, trade with logic. Until next time.